provide daily reports, which is our form of homework, and Jim will be narrating the market live to show you how all the different variables and pieces come.
Hello, hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Wednesday, 11/15th. It is 9:28 Eastern Time in the US. I have just attended the latest of Jim's webinar. He's advertising his course here. But regardless, this is a good course, and also he has really nice, really good, some insights of the market. I strongly suggest you to uh, re-watch this webinar. You can find the recordings on his website. It has really good information there. All right. If you have attended that webinar, you won't need some the background for 2 days. I don't have time now to do that. But let's see how this market open. There was a good amount of buying today, but check it where it is, right? No, we have some good day here. It's just like that. It's not that much really. It was extremely low last week or the current week and the last week as well. This is just it contrast with the previous day, but this day was absolutely, this was a horrendous volume here. All right, market's open now. The market had the chance to open with another gap, which I think would have been something really bad. Another mechanical buying going on here. You have, where the heck is my seller here? Let's find out where the seller is. Seller is 45.11. 45.11. What is 45.11? Oh, okay. 100% long inventory here. 44, 45.14 is last. 14.50. Oh no way! Is this last? No, very mechanical, right? Very mechanical buy. Buying continues here. All right. No counter-reaction to overnight inventory here. You have 100% long, market opening, just having upside continuation, volume. What's happening with volume here? Volume is still higher, can you see? It's lower than yesterday, but relatively higher to the last days, right? Kind of like, what day is this here? Relative to the last 10 days, it's kind of like on the higher side. No? Upside continuation. No intention of the market here. You can see the market has no, and the market open at boom. Let's go higher. Uh-oh. I wanna see. Alright. I as usual, I let the market settle. This is good for the market right now. What's happening now? Now you have settled down here. This is overnight inventory, 100% long, and the market, doesn't care about the long inventory here. The market is just going higher, keeps going higher. Right? There's no counter-reaction to overnight. We have a spike from the overnight. This is PPI here. The market opened inside the spike, which is also neutral. Yesterday also opened inside the spike. The market tried to do something here. We just dry here. There was nothing here on the lower side. We have a kind of like a P shape here. Weakness here. The market was bought from hard back from the previous days. Again, the structure of this rally is very, 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 very bad. All right. Doesn't mean I'm going to be short. Okay. This is positive so far, but still 3 minutes into first period. I don't trade. I have when I started to build my simple rules. Inside one of my simple rules is let the market settle. Let the market settle. Now, this is the thing. The market at this moment, as of 9:34, is out of balance. We have yesterday's range, and today, right now, is out of balance. The market is breaking out of balance. That's the exception. Right? Another sign, another thing I have here is when the market doesn't do a counteraction, that's usually a sign of a strong market. Or rather than a strong market, I would say a positive market, right? That's positive. That's a positive sign. So even though I know the structure of the market is really bad, okay? I guess what I tend to do in this kind of things is I don't want to be biased here, okay? But I guess I'm looking to the upside here. But I still, the overnight has this spike here. The overnight has the spike here. It was not as you can see. You have a spike to the upside, just as yesterday. The spike was not that big, and the market retraced it pretty much almost the whole. Retraced it. Market spiked and boom, come down to here. What I am doing now is I am monitoring this spike here. Okay, I have. I guess I could do something here. I could name this level, for example. I'm going to keep this level here. What the heck is this? What is this? Okay, this 2D distribution is from far back in time. When the market we got here, I extended. What is this? 2042, 21 is here, right here. There was a distribution in this day, back in 9:15. That was once the market closed. I was monitoring this market for continuation here to the upside. Every single level was being taken until it get over here. The next step for the market yesterday, monitoring for upside continuation, was trading to this opposite side of this distribution. It didn't do that. Okay, and as a matter of fact, the market starts to stall. As soon as this crosses, the market starts to stall here. So there were some hopes that the market was going to have some rotation here, which it happens, right? Actually happened all the way, and the market get back all the way again to the 4,400. Very mechanical trading here. I'm not ashamed to be on both sides of the market. If I'm seeing an opportunity, I understand the market is going long. I understand the risk on the long side. I also understand the risk in the short side. Trying to assess the risk, identify when it becomes riskier or when the risk decreases is important as well. When the market starts to take, for example, this level, right, and stalls here, there is some more the market can come back. Right? So if I'm going to build a position here, I might build actually around this area, and the market gets inside this area. This was a trade yesterday, right? In the opposite direction, inside this, coming all the way down to here, it becomes super risky. It's, okay, the trade is not working. And also notice that there's taper here. on the upper side. There were so many things, but the trade was to the upside yesterday. And the most important piece of information was the lack, of counter-action. Because if there's a significant gap, very big gap here, and if the gap is going to be filled, in this case, the selling happens right away from the open. It didn't happen there. It didn't do that. There was one opportunity there, and then when it started to monitor for continuation, the market was having upside continuation. It actually started to start. You can see how you can start here. This is something we have to learn also. I think one of the most important things to learn is monitoring. Not just monitoring a trade for continuation, but monitoring the market. Actually, that's more important, okay, because you do that all the time. During this day here, you could see, okay, this market was going higher. It was a terrible structure behind. The day previous was a horrendous day, and the market actually closed these distributions 1, 2, 3, but the next day just reinstated. We have 1, 2, 3 distributions again, and when the market tried to break, you could see the market trying to break here. The market was getting short here in this area here. This 4 period market was trying to break. It was coming lower. It wasn't having it. And you could see here accumulation, and the market getting short. Getting short not necessarily happen down here after this long movement. It can happen also, but I guess I was talking with a friend here when I mentioned the market was getting short, even when the market is going higher. Because one of the things that traders do is, they start to short the market when the market is super high. Why? Just because it's high. Nothing else. There's nothing else there. And that's something that can fuel the markets. Now, CPI was a number, everybody was looking at. It just happened that it was a good number, and the market has a super hyper extended reaction here yesterday. And now shorting this market yesterday was, if I was short, was crazy here. You got to be crazy to short this market. I can have a short bias here, but I'm never going to do this. This again, because I did that multiple times before. Just don't find momentum. I don't find momentum. Momentum is a force that can take the market to extremes. Now, the market is out of balance. Remember, the market is out of balance. It has explored outside, now it's coming back inside the range. When that happens, it's happening in the first period. It hasn't happened in the second period. But coming back inside previous day range actually targets the opposite side of the range. Believe it or not. That's what I start to look at. But as I say, this is just the first period, right? There's a lot going on here during the opening. There's a lot of things that happen here. Now, I wasn't checking the market. Yesterday again we had some taper on the upper side. It is 9:42 at this moment in time. I should start seeing some continuation, some pushing in the direction of the market. Let's see if that happens. What's the volume? Around around half, right? Around half. So if this is half, the prospect is we are going to have this amount of volume now. Half here. From here to here is maybe the other way. You can see volume's lower now. I could expect some decrease in volume. It's still higher than the whole last week, right? There's going to be I think there's going to be a lot of back and forth today. This was positive, coming back inside. And now look at this. No? We have taper. We do not have taper here, actually. Look at what we have in the upper side. There's big things here. Something else. Okay, something else that I noticed. And this is something based on observation, something that I got from yesterday. Let me see if I can find my. Okay, I have a screenshot here from yesterday. When I start to see, these things start getting weird. Look at this amount of blocks here. 10,000 contracts we negotiated here after the market close, just before the end of the day here. This is after 5:30 p.m. Something 5 minutes before the market at the end of the day. This is when I start to see something like this, and by observation, I have noticed is somebody is holding the market here. When I start to see the good odds, the market can keep going higher. I haven't seen this in a while. The last thing I saw this, let me tell you when it was. Okay, it actually has a lot to do with what's happening today. The last time I saw that was here in this area. Remember that we have 5-6 day range here with the non-excess high here. Actually, I have to correct this. I did it yesterday, but for some reason I guess I override here. This is not a week high anymore. This is just weekly and it's monthly high. Okay, this is support now. This is monthly weekly high. I saw that happen here in the overnight of this day here, right here. And actually thousands of contracts here. I guess it was the previous day or the overnight something the aftermarket or the pre-market. I don't remember quite well now, but it was somewhere maybe around the 40, 50, 60,000 contracts in blocks. Okay, I'm not talking about regular contracts just like this one, for example, right? What you have here. Notice also today we have 11,000, but we don't have blocks here, just like we had yesterday. Remember, this is very different. This is a very different market than yesterday. Very different one. A loss of capital is lost when we try to trade. When we assume the market is the same every day. That's not the same. There are not 2 days that are the same. Okay. Now why I'm keeping this low here, this market, even though it has been retraced, is because this is a reference from yesterday's trade. Okay. Yesterday trade stalled after this, and the next, because the monitoring for continuation has, let me tell you what number, 45, 40, 50, 44, 45, 40, 40, is this level as a next reference in the upper side. Okay, it's actually not that far right now. Volume is decreasing here. The thing is, this market has momentum. Look at this mechanical buying here. Come on. I cannot make this up here. Right? Who is holding this inventory here? If I open, okay, let me do this. Okay. They are trying to continue the trade to the upside here. What I'm going to do, I'm going to remove this data that I have down here. I'm going to add this week. I'm going to keep just yesterday here and add everything else. Because if I put too much data here, it's just settings. I'm going to add more days. I guess I can have here like all the way to 7. Okay, right there. Look at this. This is this distribution close, right? Yesterday, upside continuation has the opposite side of this day as next level to monitor for upside continuation, right? it was kind of maybe inventory get too long and some rebalancing happened or needed to happen, which happened. And the thing is, this looks like actually this looks like a short cover here, right? Now, the next thing the market has to do for upside continuation, if I have a call or whatever or something like that, right? The next thing the market has to do is take this high. That's the next thing. You're going to monitor this market for upside continuation. Remember, I am one of the most important things that I need to do is to monitor for continuation, not my trade only, or not just when I have a trade, but monitoring the market. What the market is doing now is going to the upside, right? Momentum is to the upside, the trend is to the upside, everything is to the upside. Okay, the field side change. What would be the field side change in the market? Maybe still inside this range for one time frame higher to be over. The market needs to take this low. It's kind of far, right? So what's the next thing? Market taking back 4,500, repeating the base or the whole thing from yesterday is exactly half back, not just half back because it was half back. Was it half back? Yeah, it was half back at the time. Was it? No, it wasn't. It wasn't. Well, half back was, I believe, somewhere. Okay. Because this has extension. There was something here, right? And the market corrected that with this break. But it's buying from the 4,500. Okay, that would be the next thing. Okay, but what do you have before that? This is still long distance, right? What do we have before that? Okay, POC. Before that, overnight low. Before that, I think more relevant, settle and last. Okay. Now, market's trying to break again. Hasn't get inside this range. This level here, 45.18. What the heck is that? Sometimes I just start marking and I don't remember what the heck is that. It was nothing, I think. I think that was the high of this distribution from this day, right? I may have used that to monitor the market for upside continuation. Okay. There's a big pullback yesterday here. Now, what the market tried to do yesterday at the closing is try to go to the downside, right? What the market is doing now? Is the market having continuation from the late movement to the downside? So far, it's not. So far, the market has rejected this movement. But markets never stop. Market is a continuous two-way action. Okay, if that is happening now, it doesn't mean that's going to happen next. It's going to continue to happen next. We don't know that. Where the buying is coming from now. Where the buying is coming from. I start to observe that. Where the buying is coming from. Exactly to the tick from value area high yesterday. Who buys from those areas? Right? Something that I heard, I believe yesterday or somewhere, I think it was this week, not sure it was yesterday, was the participation, right? Last week, retail participation, okay? Retail positioning in the market was its historical highs. Right? The amount of retail in the market was historically high. And I feel I cannot negate. I kind of like feel sometimes I kind of want to feel proud of myself when you start to follow to do your own assessments. You start to do your own observations. I have Jim Danton as my benchmark. And when I start to observe the market, take my own notes, and then I hear Jim talking about that. And Jim is a person that has a lot of contacts, right? Has a lot of insights in the market. He still has a lot of friends in the market, and his information is more broader than mine. He has more information than I do. right? When he says kind of like in the way that confirms what my observations were, man, I can't avoid to feel good. All right. Now, what the market is doing now? Let me take. Let me do something. This. I have a chair that just makes too much noise, man. Sorry about that. Okay, the market is having some down. Oh, okay. I know what. There was a gray line here that I just erased it. That was that was this. The overnight, huh? The base of this part. You know, the market has taken all these longs now are okay, very nervous. Next thing, last, right? The movement could be to the downside now. At this very moment, as 9:54. Remember when I start to monitor the market, the first 7 minutes, I want to see something. If the market has any direction, we will have it in the first 7. The next 14, or close to the 14 minutes mark, there will be another push in the direction of the fields when it happened at the beginning. And then at the closing, the last 7, there's going to be a final push. You know, trying to do intraday breakout of the intraday trade, relative to what's happening at that particular moment, right? We had a pushback to the downside. Last is still there, saddle is still there. Some of the overnight inventory has been removed now. Yesterday we have an awesome, fantastic amount of volume in the overnight session here. We have almost like 500K, right? Last night, 400. Yeah, there's a lot of inventory here in this. The difference from yesterday is that this inventory that we have here was built in the whole period, in the whole 12-15 hours that this session has. Yesterday, we had until 8:30 a.m., we have something around like 120, 150, something like that. And 350 something comes after CPI. That's the difference from yesterday. So it is more likely now, it's more likely that this inventory can be taken out. You know? And I'm saying that just now as 9:57, 9:56. Okay, I didn't expect something like that to happen at the opening. I had another opinion at the opening. No, but the thing, what I try to do is I try to understand market dynamics. I try to understand. I try to get what the market is doing, not what the market will do. What the market is doing. Right? That's the first thing. If I want to position myself with the market, I need first to understand what the market is doing, or what the market is trying to do, or how good the market is doing what it's doing. I know traders can get emotional here now. Oh, finally the market is breaking. Finally the market is going lower. Finally I have my short is working. I was constantly being stopped out yesterday. I lost so many times. Now I got my trade. Now the market is going to come all the way down to here. It's going to close the gap today. Can it do it? Yes, it can do it. All right? But I'm not going to count on that. Right? I'm not going to get too attached to my position and just go with the market. Start monitoring the market. For disclosure, I had built a short position, so I got some puts on the SPY. And I decided to do that because I consider the risk of this market, the risk of being low, is super high here. It's super high. There are expiring down the road. There are not this position doesn't expire this week. And building that position didn't take too much. My risk is very low there. I decided, when I build that, my maximum size is 4. I took 5 actually, and if I lose, Okay, I'm not going to lose that much, no. But this is what I consider a asymmetric opportunity. There could be something there. Can will I have that? I don't know, right? But I have still established, beforehand how much I'm willing to risk here. If I see this market is I don't see if I don't see anything happen next week, okay, or if the market start to getting actually too far away from my position, I may consider to close it, right? Some opportunity to hedge also happened yesterday. I don't see it here, but let me show you something here. Because trading, there is so many things that we can do with trading, and this is one of the things I'm going to show you. Let me see. Clear symbols, detach. Okay. Right. Okay. We knew yesterday that there could be something yesterday, because we have CPI yesterday here during this day, before this day. We also knew that the market was close to this, very close. There was no excess in the monthly, there was no excess in the monthly, no excess in the weekly time frame also. The market, I don't know, there was no excess here. There was directional movement in the weekly, directional move in the week and the monthly as well, and directional move and really close to this breakout, right? This is an area where the market has been traded multiple times before, around this level, 44.38, which is just above 44.23, and this was the close of the gap. Having some puts here, which were not that expensive, guess what? And the VIX was even, VIX was really low. Okay, the VIX was not reflecting. The VIX is not reflecting the risk of this market. Okay, but the opportunity to get some calls at this level before the number, before CPIs, these calls were really cheap, man. If you have somewhere against this half this market was down here, and these calls here in the SPY. Let me see what number were. What are these? Where is that was 4041. 4041. No, my bad. 4044. 4044 calls. Those calls were like 37 cents. Right? 37 cents. Kind of like you can get like 4 of those, and your risk would be if you dollar speaking, your risk is $100. Right? As a way, not taking the position not as a way to the movement, to a movement to the other side, but as a way to hedge, right? To hedge your short, but to hedge my short, right? And sometimes you just get lucky. Remember, when you got the market, when you got something good, you're lucky. When you do something bad, then you need to analyze what happened. Now, I don't like this selling here. Look at this here. Coming from halfback, coming from the opening, coming right before this. But no taper here, brother. This can have a big spike to the downside here. Second to remove. I mean, this market is getting short here right away from the opening, but it's not having it. If it does have it, to remove all this overnight inventory, notice how much volume we have so far, 180. All the overnight has 400, right? There can be a big spike here. Boom. If the spike happens, I think that actually is a good for the upside. This is a lot of mixed signals here. There's a taper here, no taper here. 3 minutes, 4 minutes into the opening. The volume was even lower than I expected. How much lower is this? Maybe like 20% lower? Let's check. Let's check how much lower that is from yesterday. 18% lower. 18% lower here. All right. Something, when you try to understand the market also was, the previous days. Previous days. Oh, come on, what the heck did I did here? I was spending the whole day, trying to understand what the market is doing. Well, the market actually, I guess what I had is where the market was going, where the market can. I was monitoring this market all day long during this day. Oh, it was on Friday, and I saw some potential that, was having upside continuation, some continuation. How I monitor an upside. I thought maybe there could be something here around the 100 moving average. I did check first these lines here. Nothing happened here, so I disregard that and I start keep moving, right? At the end of the day, I did I guess several shorts here. I remember when you have a rotational market, it wasn't a rotation, it was a trending market, right? The push is always to the upside when you have a trending market. If there is if I'm going to short the market that is trending to the upside, I will do it really close to the end, right? Because the odds that there is some rebalancing there are good at that time, but always it's not a good idea to do that. Right? If you don't see the context, if you don't understand what is happening, thinking that the market is just has to go to the lower side, to the short side, just because it's too high, that's not a good reason. More likely, more often than not, you will find yourself in the losing position. Well, at least that's what happened to me. I was told, don't do that. Humans, right? I just keep doing that until I learn my lesson, right? Don't do that. And I like Jim. Because every single thing that he has said, I thought I have outsmarted him. I thought I was watching something that he did miss, something that he didn't do it. I thought he was missing opportunities. I could do this, I could do that. And at the end, finding my own way, when I started to observe the market, I started to do my own notes, my own homework. You know, my path just merged with him. I need to take this call. Hello. I'm sorry, that was a long call here. 10:14, all right? The first 7, there was nothing here, no directional move. Obviously, after the 15 mark, there's not going to be continuation, no? The continuation could be to the downside, could be to the upside. So far, we have an inside bar here. The trends to the upside. The market has come back inside previous. It is still inside. Has not come back. It is still inside. You know, I would, you know, something different. You know, the scenarios are always different. Right? We have a scenario here, a B, for example, opening outside this range, and C coming back inside. Right? That's a different situation there. You know, the risk may be different there. The situation is different. All right, I need to get back in sync. I try to get back in sync with what's happening now, because I just got distracted here. All right. As you can see, when I do trade, you know, most of the job here is observation here. The market gave us 2-3 opportunities a day, and my TPOs are 30 minutes. My intervals are 30 minutes intervals. My bars are 30 minutes bars. It needs time. Now, notice when we talk in the morning about this, you know, look at how misleading this thing is. You know, this looks like taper. Okay, well, taper here because the shape, right? But look at what we have at the high. You don't have that much here. Upside continuation from yesterday has this as a next level to monitor. Huh? So far, this day is over. This day is starting. We have 1 period, 2 periods. What these periods are doing so far, they are still going to the upside. All right, they are still going to the upside. Good. Also, this high is no good. No? Market now has been bought from the low of this distribution here, or from this, or call it whatever, huh? But you know, it's kind of like a continuation of this of the previous day what we are having here. Yeah, no, opening up here would have been really crazy opening, right? Really bad for the movement. This at least, you know, this opening here wasn't good. Now this is, what the heck is this again? Oh no, this is a contraction to overnight inventory. There is not notice how these lows were bought here. What you got 1, 2, 3, 4, 5 lows here. Okay, we have a directional move now. Continuation actually, huh? Continuation of yesterday's move. Non-excess in the upper side. The next thing I want to see is, the next thing to monitor for continuation is this high being taken out. What's after that? We have this area here, which has, just check at this day. You know, this is what traders will see, right? They will see 1, 2, 3, 4. I mean, this is from September 14. This is the September contract. There's nothing here already. There's nothing here. You know, we are negotiating now December contract. December contract has no volume in this day. September 14. Let's check September 14. What do we have September 14? We are trading September 14. Okay. September 14. Okay, September 14. Look at the ESC. How many contracts? Volume ES. Actually, we do have something there. Like 2 millions. Ha. Okay. So the last. My bad. ESZ 1.7. 2 millions. Actually, the 11 is when it is it had some. Look at that, right? The 11th. Let's call that day as here. Come on. It's not charging. I got only I got only 12. What's happening? Why I don't see that? Well, I don't have to see it here, but I do have 12 and 13. Probably it was something in here. Otherwise, I would see some 9.5, 9.14, 13, 12. What day was that? Was that Friday? Let me check. September 11 is Monday, actually. No, probably it was somewhere in here. That day has been taken, actually. Right? Oh, right there. This is the 11. This has been taken out. I mean, before. The only day that we have here from that contract is the 14th. We had the market going lower here, short in the market, some movement to the downside here, and this inventory was removed when this market went higher. This balance, a perfect balance during this day. Can you see? Kind of like a weird V shape here, characteristic of long liquidation. And this is short covering. This area here is the last one of the current contract, which is this area here. That would be kind of like technical view of this market. What is this 45.50? What the heck is this? What do I? Okay, this is a pullback. I don't know. What do we have 45? Let's check. Let's check. Oh, okay. This was a weak expand profile. This was a weak low of this day. Market going high. This was a weak reference, but the next day just corrected that. Unless there is something here. Let me check. Let me check for 50. What do we have? 45.50. 50 has been taken here. There's nothing. The next one, 45.62, which is this one. 45.62 is this one as well. And this one here is the next thing to monitor for upside continuation. Okay. Oh, 62. Market is right here. Very close to that is this one here. Oh, which one? This one here, right? This one here. By 62. Let's extend this. This is very mechanical one. 562. It would be a very mechanical trade here. 562. Traveling to this area. I'm not saying the market will or can do it. I'm just trying to monitor the market and understand. But there's no 40/50s anywhere here. 40. No, there's nothing here. Okay, upside continuation here. Let's see. Look at this, man. Look at how this movement, the market just need a push. This is when how the market pushes is being pushed higher, right? Right now, look at the volume here. There's nothing here, right? But check it. Check. I'm going to show you what we have yesterday. Look at this. This is going to be completely different, right? Look at this. What happened yesterday? The amount of contracts here. A lot of contracts, right? This is 1,000 contracts here. Could be like 20, 50s here. There's one here, 300, one order, or one buying or selling or whatever. I don't know what's what. It was being contract negotiated here, 300, 500, 600, 100, 250, 200 here. There's a lot here, right? Lot. Look at the amount of buying here. Or no buying, the amount of well, it was buying here, right? Because the market closes higher. This kind of activity is usual expected at the closing, but the amount of contracts here is higher. And you can see a lot of that during the intraday here yesterday. This upside, and notice or compare that to what's happening right now. Notice. Look at this 2 periods, or look at what we have here. This completely. I don't, as I say, I don't use this to trade, but to observe, to watch the market, right? And once the market has momentum, there was but I just showed was a push to the upside. The market just keep going higher, right? The momentum keep pushing the market higher and higher and higher. To have some gains here. Watch. I would strongly suggest you to watch today's webinar, Jim's webinar from today. Today's Jim's webinar. There's some good insights there. And it's free. Well, you don't have to sign for his courses. I just think it's very good information that we can have from there. Alright. I think no. What is this body here? Yeah, I had that. Suspected it's even kind of like. It's going to be about the same as the first period. Like 20% lower. Maybe it's increasing a little bit. Context is everything, huh? Context. This is. It seemed taper at the beginning, but very misleading. Very misleading. This can trick traders too, technical traders. Now, the taper happened in the second period actually. Do you remember when this period was forming? We had high volume on the upper side, selling coming from this high here, and actually the market tried to go lower, and volume tries here. Even every level has less and less and less and less and less volume here. Dum, dum, bum, bum. Oh. How this market is being traded? It's being traded very technically, right? I base it on just that piece of information. I would expect some buying here, at that level, just because the way how this market is being traded. No taper on the upper side. Okay. Now look at formation we have here. That's not here. I don't have that. Now, I was expecting some buying here, right? Around this area. Let's see. It's 29. The field 7 is kind of struggling. This market is struggling here. This could be excess. This could be excess on the upper side, but I still don't trust. Don't trust this. There's no taper here. And I believe this market is very susceptible to any kind of negative information that can come out. It can trigger some serious selling here. I'm not saying so. I will trade this market carefully here. How much volume? You understand now the volume is going to be lower, right? Volume is going to be lower than yesterday. We have 12% lower. Kind of increasing a little bit. It was 17 at the opening. Now it's only 12, so that's a 5% increase. It's still lower. Like, you know, the nuances of this of trading of the market actually are, you know, if I'm seeing something, for example, right? I see the volume going higher or lower or whatever, for example, right? And the next thing that I got here, and this could be, I could just expect something like this, right? Because I'm just moving this high. But what happened instead of doing that, the next period do something like this, right? There's a huge increase here. So that's a sign, you know, something has changed there. You know, it's just like when you are driving, you're on the highway, after a year, and if you have experience driving, you have 5-10 years experience driving, you are watching everything. You are not conscious. We are not conscious driving, but we are actually monitoring all of our surroundings. And whenever we drive, you're on the highway, on the road, what we do is monitor, actually, start to monitor subconsciously the patterns of traffic. If we're on the highway, we will see cars going fast, right, on both sides at the back, right? But if you see, with side of the eye, we perceive something that is not, doesn't fit the pattern, the speed. We will see somebody, for example, that's going from right to left, right. That thing will catch our attention, and those are the nuances in market. You know, those subtle changes that happen actually can be a sign of something that is happening, something that's different. And the way how I trade, the kind of trader I am, those kind of things are very important to me. You know, because it can be a sign that something is changing. Something is brewing there. Okay. I apologize for my English. English is not my first language. I'm a Spanish speaker, native Spanish speaker. But I can suggest you some, if you wanna, somebody asked me one day why you speak like that. I mean, I try to speak about markets. I don't pay too much attention to my English. Right? If you want to learn English, there must be some good teachers out there. Now this is a sign of weakness. Another sign of weakness. Yeah, coming one tick from previous period hard back. Now, the previous days, it didn't matter at all. Right? There's a bunch of this level bottom, daily hard back, previous period hard back, daily hard back, previous period hard back. Yesterday as well. The market just didn't care. The market momentum traders just didn't pay attention to that. You're just keeping going higher. So screw that. We're going higher. Tum, 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 tum. I can see the market has stalled here. It's having hard times now. It's just not moving, man. Another inside bar. It is just 5 minutes into the first period. Okay, I am using the same system to monitor this market for continuation. My first 7 minutes. Oh, something else. Something else that I'll love to highlight here. Now, I got, also regarding yesterday break. Now I got these kind of movements, right? Yeah, the market didn't have any kind of sideways trading here, down here, right? And when I have this kind of rallies or this kind of breaks, I have noticed that the market takes its time. Maybe something like 6, 7, 8, 9 days, before it picks a directional move. In this case, how many days we have? 3, 6, 7 days. 7 days, and boom, we have. This could have been the market could very well have been down here, right? So that's what this business is. It's not about trying to guess what the market will do, but go with what the market is doing. The structure is super weak, the structure is very bad in the lower side, but the market doesn't care, right? Market is doing what it's doing. It is end of the year as well. The pain trade is back on the news. The pain trade is a movement the market does that will inflict the maximum amount of pain and the maximum amount of traders. All right. Okay. So far we have upside continuation here. Previous day highs being used as support. This low is not good. There could be something here, maybe some correction. I would expect something here. Whatever happens after this, if the market keeps going high. Notice how this market has stalled here, right? We don't have. The market tries to go higher, not taper in the upside, not taper. The same thing that happened on B, when the B opened, the same thing is happening now, right? Traders do what works until it doesn't work anymore. All right. Unless there's any questions, I guess I'm going to call it a day. I wish you guys have a wonderful trading day. Stay safe there. See you.